Hi, it's Nishi, and today's video I want to talk about how getting involved in tax avoidance schemes can actually ruin your life. And what I mean by this is, and why this is a really important video actually, that's where I should start, is because quite often as an individual, if you want to invest in something, those investments are heavily regulated. Like there's the Financial Conduct Authority, and it's there to stop people mis-selling stuff to you and actually ruining your life savings and your personal assets. However, in terms of limited companies and business, it's an incredibly unregulated area. There's a lot of people out there offering to sell you schemes which will remove your tax bill or eliminate your tax bill, and then they charge you money to administer the scheme, and quite often they have absolutely no personal accountability. So let me give you a really good example of a tax avoidance scheme here. So there was a contractor loan scheme a while ago, quite often where you had people who were working for a larger business through the limited company, but maybe not just that, like maybe people were running their own business through a limited company, and someone would come along and say, look, join our scheme. What you can do is we'll charge you a management charge from this offshore company, which will wipe out your corporation tax, and then what you can then do is we'll then loan the money back to you, and that means because you're receiving a loan, you don't pay any tax on it. So that was a really popular one, and what's happening at the moment is it's unraveling. So there was a bit of legislation passed called DOTAS, the Disclosure of Tax Avoidance Scheme legislation, and what happened was whenever you had a scheme or a scheme provider that provided that kind of arrangement, and many other types as well, they would have to register for HMRC. And what that registration with HMRC did was it told HMRC this was a tax avoidance scheme, and that they would have to, HMRC would then have to go, when their resources allowed it, would have to go investigate it and then charge the people involved in the scheme penalties. Not the people selling the scheme, the actual taxpayer who signed up to the scheme, the penalties and interest and all the late payments. So what happened was quite often people who were selling these schemes were saying, look, we're registered with HMRC, it's completely legit, but because it's so unregulated, what your average taxpayer didn't understand is that, yes, they're registered with HMRC, but in a really, really bad way. It's like they've already notified HMRC of the crime before it even happened. So what then happened was there's loads of business owners and contractors who were enrolled in these, and then HMRC would come to them like 7 years later, ask them for 7 years worth of tax, all the back taxes, the penalties, interest, all that kind of stuff. And because of the DOTAS legislation, the risk didn't finish in their limited company. It could actually be transferred to the individual director. And what that meant was there was like a back door into this, an individual being impacted financially by a non-regulated industry. So that's just a brief explanation of how tax avoidance schemes work. And the reason why this is so important is they're still being sold, and people are still saying it's registered with HMRC, and there's schemes that are never going to be accepted by HMRC still being sold. And by the time the actual investigation happens and HMRC want their money, the person that sold the scheme will be sitting on a beach somewhere enjoying their best life with all the money they made from the fees from selling that scheme, while their client has to pick up all the pieces. So the moral of this story is, if it's too good, sounds too good to be true, it can be. And also there's a lot of accountants who took really big kickbacks from the scheme providers to push their clients onto these schemes, even though they knew it was going to be really bad for their client. And if you've got an accountant that's pushing one of these schemes towards you, then it's worth getting a second opinion, because it could be that you're risking your entire future just so some people can get just satisfy their greed and make money off your misfortune. All right, thanks for watching. I'll see you in the next video.